So where do we go from here the next few months? Anup Maheshwari of DSP BlackRock Mutual Fund is with us now. Anup, morning. Thanks for joining in. What's your sense? Is this just one of those relief pullbacks, or could the market have a constructive shape going into elections or even after that?
Well, I think, that will be pretty much the sign of the times for the next year or so. We'll see a lot of such trading moves, markets heading up and then coming back off a bit. So I don't think there's anything clear yet to give a sustainable trend. And clearly, nothing will signal that to us either over the next 6 or 12 months. But I think the more important thing is that, markets have reached a point where there is some level of sorting out of valuations taking place. So unlike last year where everything was pretty much heading down, I think we're beginning to see pockets of performance coming through sector by sector, which in itself is a good sign. I think, clearly it doesn't imply that the market bottom has been achieved or not, but it really makes that pretty relevant, because as long as there is some opportunity available in the marketplace, that's what we'd be more interested in. And it does seem to be sorting itself out. If we take the case of auto or cement or some of the other sectors, I think clearly there are periods where you can actually make a certain amount of money as the valuations sort themselves out.
Anup, hi. Good to see you after so many days. The other point that's being made aside from this sorting is that for global markets generally, things had gotten depressed to such a level that perhaps we saw the last wave of capitulation, where there's basically exhaustion in terms of selling. Is it too early to call that, or would you go with that theory?
I think it's a bit early to call that, Mitali, because when everybody is calling the bottom, that's not normally how bottoms are made conventionally. So I think just from a time cycle point of view, we've got more time coming. I'm not sure whether we'll hit a new low or not, but the point is the market has to spend time in this zone around where it is, plus minus some percentage. But within that time period, over the next maybe year or so, I think valuations which have universally got knocked down will start readjusting themselves and coming to slightly more balanced levels. So I think we're in that phase where, as I said again, taking the market call is pretty pointless. Whether it's bottomed out or not is not necessarily as relevant actually as figuring out whether valuations have got distorted in any sectors and whether things are marginally improving there.
Just to pick up on one of the sectors you pointed out in terms of a valuation buy right now for the autos, what do you think is going for that space? The fact that valuations got as depressed as they did, or are you seeing the cycle turning around now?
Well, it's a bit of both. Clearly, autos were, had come off a bit. But added to that, clearly the big catalyst has been the fact that the numbers have turned out to be much stronger than people expected and more resilient. So, everyone's keeping a close eye on the monthly numbers. You can measure it regularly. And that, I think, is continuing to drive the sector. Now, the point, though, about trading markets is that these things can get priced in pretty quickly, and then the room for upside gets fairly limited. So, unfortunately, this is a phase where, a pure buy-hold strategy may not be as effective for investors, at least in the very near term, because there will be a lot of rotation that keeps taking place. So at some point, even autos may see that trend.
Anything other than autos, Anup, in terms of cyclical sectors which have seen a lot of pain from a stock price perspective, which you think might have bottomed out? Because it's interesting, because these are the cyclicals which have suffered for years now in the market. If one by one they start bottoming out, you get a sense of hope. Anything other than autos that you can single out?
I think commodities is a space that we're turning quite optimistic on. I think a lot of commodity stocks are reasonably priced, way below book value now. And even global commodities, we get the sense that over the next 12 months you will see some very sharp movements, and I think potential for commodity equities to move up are also quite high. So commodities is one space that clearly we have a close eye on, and probably makes some sense to own, or at least over the course of the next 12 months.
When you talk of commodities, do you mean global commodities like metals, or even local ones like cement?
I'm talking largely of global commodities, metals. Within metals, virtually all categories. Ferrous and aluminium would come at the lower end, but clearly copper, zinc seem to be better positioned right now. But generally speaking, I think metals as a pack will actually do reasonably well.
can you put your finger on how the money is behaving towards India as a market right now, Anup? I mean, we've seen a lot by way of short covering, but are people getting into these value buys that we were just talking about, or are they still waiting and watching this market?
I think, we're already seeing some gradual improvement. At least the pace of selling has clearly come off dramatically. In fact, there's been marginal buying now. Frankly, we're not as negative on FI flows as, one would normally tend to be at times like these. Our sense is between now and the end of the year, it may not be as bad as people imagine. And I think a lot of these global allocation funds are clearly looking at India. The dedicated funds have been more influenced by inflows and outflows out of their funds, but even there I think the outflows have stemmed down a bit. But global allocation funds clearly, who have the choice to move pretty much anywhere in the world, I think on balance, at least people we speak to seem to be more inclined to invest than not. So overall I'd say, the FI activity may surprise a bit actually on the upside.
Are people waiting to see what happens with Q4 earnings in order to take some kind of investment call, or do you think that has more or less been discounted?
Yeah, I don't think earnings will be the big influencer, frankly. When valuations are the way they are, I think earnings and understanding of earnings is pretty clear to a lot of people. I think elections clearly will be one phenomena from an FI perspective that they pay attention to. I don't personally think it makes too much of an economic difference to markets eventually. But I think around the event there will always be some volatility, some movement, and some FI activity clearly, because they do tend to regard these as pretty important events. So I don't think the results will be as much of a sort of mover of markets as maybe the elections might be.
How are you approaching the financial space as a fund manager, Anup? Are you underweight, or did the recent fall lead you to accumulate many of those names?
Well, at a sector level, we're still underweight. Clearly, within the sector, our preference at this point would be for private sector banks over public sector banks, again, from a 12-month perspective. I think, clearly the sector has been underperforming and buffeted by all sorts of concerns. And some of those concerns, frankly, are quite valid and will show themselves through over the next 12 months. But the point is that I think private sector banks clearly have become a lot cheaper, have very stable business characteristics over long periods of time, and I think that's a sector we're pretty keen to continue to look at. Public sector banks, on the other hand, I think is something we'd rather evaluate somewhere down the road, 6 to 12 months down the road. So we own some, but we're a little underweight on it right now.
Just to scratch the point deeper, the one that you started off talking with, Anup, have we reached that stage in the market where you may not have great upside for many months or quarters, but that accumulation zone has begun where you start cherry picking individual stocks and sectors? Or do you think all sectors still have that overhang of that big market risk where you could see another 20-25% leg down in the market, which will inevitably drag every sector down?
That's not an easy question to answer, Udyan, for the simple reason that global macros are still very, very fluid. And as long as macro conditions are fluid, the scope for those 20-25% down legs always exist. And by that I mean, let's say, we're not even sure whether we're heading into more deflation or eventually we'll have heavy inflation. I think, until those macros stabilize, it's very difficult to give a convincing call on sustainable movement in the markets. Which is why for the next 12 months we're not convinced that this will be a consistent uptrend. We're still calling it a trading-oriented market. So in that sense, one can't rule out the possibility, frankly, of another decline. It's always on the cards. I'm not sure what the catalyst could be. I think one thing being talked about globally is currency devaluations across the world. And if that picks up in pace, that will have implications for global flows as well. But I'd have to say, as a fund manager and as a sort of looking at things from a bottom-up perspective, there is a fair amount of value out there. I mean, there's so many stocks quoting at reasonably good dividend yields, way below book, that you start wondering whether, if you're not going to look at them at this point in time, then when on earth will you? So I think there are opportunities. Oddly enough, most of them manifesting themselves in the mid-cap and small-cap space, which is the place that everyone wants to be very far away from right now. But I think, if you can sort of buy and hold for a little while in that space particularly, there's probably some good opportunities there too.